And we're getting ready. Oh, no, that's not good. No, didn't I hit print? Damn it. Yeah, this was not ready yet. And there we go. And this one. Hey, Sonny, how we doing? Just getting ready to get started. Just getting ready to get started. See if I get everything done right. Yep, that's working, that's working, that's working. Everything seems to be working just fine. Yay. All right. What's going on here? Yep, that one's live too. Okay. So, let's get started. First and foremost, let's see what we got here tonight. Let's see. We got Corey, Ranger, Rock Driller, Sonny, Brassa McLin. Hoffa's here. Whoops. What else do we have? Hoffa's there. Heather, Keith. Doc's here. Both Docs. Tim Bender, what's happening? Hans. Cameron. Sticky Nicky. Oh, Slicky Nicky. Okay. Cool beans. Good evening. Stock Hacker, how do we sign up for next Saturday? Yeah, I'll let you know. Once we're still working the bugs out. Good evening, you can do for Stock Hacker 3. What's happening? All right. Mom's here. Harry's here. Bob Singh. What's happening, Bob? David Rowe. David. Mike, good evening. Are you in Telegram? No, Bob. Dude, I told you. Here in TikTok is the only place. You keep sending me text messages and I keep replying back to you. You really want to chat? Bob, send me your number. I'll actually give you a call. You've been texting back and forth on TikTok. Okay. Tim McCarty, how you doing? No, I'm not on Telegram, dude. Tony, all good. Toshi is pumping. Okay. Hello from Alabama. Thank you for taking the time to teach us. Hey, you're welcome. Trying to upset the apple cart. Anyway, what do I think about Life Good Dividend? What do you think about if Life Good Dividend? Okay, I'll be Mike 71. Got to ask that question a little bit differently. Hello, Small Tibet. Well, what do you think about Life Good Dividend? Okay, yep. Let's make money, Zanny Zoo. Heart Chief, okay, how about them Chiefs? Uh-oh. Life, cool beans. Bob, yeah, no, Bob, don't put it here. Not here, but here, up in, if you click on my bio up in the top right there, that's where you put your number. Because I'm not going to be able to find it. You know what? Hold on. I'll just stop all the comments for a second. Hey, James. Cool. Arizona. All right, Bob, hold up a second. All right. All right, so what are the questions we got? If you're down on a stock, what's your highest delta you take to get 1% for the week? The highest risk. Johnny, that's a good question. But I'm not quite sure what it is you want to hear. Because when I say I'm doing something specifically for a 9-year-old, okay, yeah, I hear you over there. Okay, it's not that difficult. But once you want to start getting the Greeks involved, yeah, it becomes a lot more challenging. So yeah, if you want to have a conversation about it, great, but it's going to confuse a lot of people. That's why I don't talk about it here. I like to keep things simple, safe, predictable, and consistent. Okay, remember, it was created for a 9-year-old, but once you start talking about the Greeks and the deltas and all that kind of nice and fun stuff, it's no longer simple. Okay? Yeah, Bob, I got your number. I actually wrote it down on my pad of paper, so I'll give you a buzz. 9 if my damn business. 9 if my damn business, but is yours I okay? Oh, my eye okay. Yeah, I got stuck with a nail when I was younger. Don't worry about it. Been that way, sorry. TJX, Johnson & Johnson, bro. Wait a minute. If you see me, don't talk. Bro, if you see me, don't talk. I'm quite, all right. Whatever. All right, where are we? Where are we? What are we doing? And let's progress. First thing of the evening. If you're close to retirement with good savings in Roth, IRA, better or worse. And now, hard sheep, my personal opinion. Here you go. Now, my personal opinion is take responsibility for your own money. If you leave it in an IRA or 401 or someone else's care, yeah, you're going to get what they give you, not what you should be getting. Now, if you took a look at what they are doing and you could learn to do the exact same thing or something similar and get 2, 3, 4 times the amount that they're giving you, what are they giving you in an IRA average? I heard someone was happy with 20% last year. Okay, Tim McCarthy, hold that thought, okay? If the stock goes down, you chase it down. My dad is rich. Well, okay, lovely, good for you. Okay, Leo, what does it mean when an EX dividend date is 10 days after the date of record? I'm not quite sure what you mean by that, but let's take a quick look because that's not what I'm seeing. Okay? What I'm seeing, take a look at, we're looking at Procter & Gamble, okay? There's 4 dates to remember when it comes to dividend stock. One is the announcement date. Now follow along. The announcement date, right here. Whoops, go on. Okay, Procter & Gamble, the amount of the dividend announcement date. That's when the company announces the dividend. Okay, then after that, you got the EX dividend date. Okay, the EX dividend date, 1/24. See where it is? And then the date of record. Look at what it says. 1/24. Okay, date of EX dividend date, date of record, payment date. Well, that's 2 weeks away. See, your announcement date, January 14th. The dividend date, January 24th. EX date, January 24th. Payment date, February 18th. PBI. Alan, PBI. What the heck is PBI? Hold that thought for a second. Nancy, how you doing? Okay, so do you see what I mean? When you're looking at the dividend for that question. All right, where are we going? Where are we? Oh my goodness, questions were all rattled away. Got away from me. All right. Okay, so hard sheep. If you're close to retirement with good savings, is Roth IRA better or worse? Okay, like I said a second ago, it is basically going to be all dependent on what you want to do. If you want someone else to take care of your money, you're going to get what kind of returns they give you. But if you do it yourself, what I'm showing here is just one simple strategy that I created for my 9-year-old. My hair's a mess. That I created for my 9-year-old. Okay, so it had to be simple, safe, predictable, consistent, all that kind of stuff. So what are you looking to do? Are you looking to leave it in an IRA? And if it is in the IRA, who's managing it? Anyway, let's keep on going. Mikey G got 4.7 on Intel. Cool. Have to risk earnings report. Well, it depends if you like it. Leo, evening. What does it mean when the EX dividend K? Doesn't mean anything, actually. Because the EX date is the last day the stock trades before the dividend's paid. Okay? But most of the time nowadays, the EX date and the date of record are the same date. That's nowadays. Years ago, they used to be 1 or 2 days apart. But now it's the same day. Okay, what do I think of PBI? Who the heck is PBI? Sounds like a petroleum company. PBI. Pitney Bowes. Oh, interesting. Oh, Well, let's take a gander. Let's go over to Yahoo Finance. And put in some PBI to see if we know exactly what it's doing. PBI. Now remember on Friday, I said I was going to turn my computer off at 2 o'clock and not turn it back on until Sunday night? Believe it or not, I walked away from the computer. Just turned it on like 15 minutes ago. All right, PBI, here we are. Let's look at historical data. Now, the reason why I want to look at historical data, only because, I got to stop this for a second. Okay, the reason I'm looking at historical data, because I want to find out if this company is profitable. Well, I'm going to go directly to see how often they've increased their dividends. Because if the dividend is a portion of the company's profits, and the company is profitable year after year after year, well, the dividend should get higher and higher. Okay, so let's just look at the maximum amount of dividends this thing has. And look, it's 2024, 5 cents, 23, 5 cents, 22, 5 cents, 21, 5 cents, 25 cents, 19. Yeah, no, sorry, no, we looked last week. We did, seriously. There's 9,843 companies. 9,843. If this doesn't fit what we're looking for, now we're looking for consistency of profitability. Is the company consistently profitable? Well, if in 2015 and 16 it's a 19-cent dividend, and granted it's not a lot, but just go with the flow. And look at it. 2014, 19, 2015, no changing whatsoever, staying consistent. Well, that's not been profitable. And look, even up to 2018, it was still 19, no change at all. And then, right here, in January, February of 2019, it drops from 19 down to 5, and it's been at 5 ever since. So for me particularly, I'm going to say no to PBI. Okay, not that I don't like the company, it's just the numbers just don't work. Not for me anyway. Anyway, next. Sorry, dude. Mikey G did Intel. Let's take a look at Intel. I like Intel. Intel, INTC. All right, where are we? Right there. Okay, I gotta turn that light off. It's bothering me. Come on. Had to get rid of that light. Now we go, all the way to the floor. Okay, what was I doing? I forget. Intel. Don't get old, folks. Intel, here we go. Check it out. First thing I always want to see. Okay, I always want to see the 1-year chart. That's the very first thing. Because you can take a look at a 1-year chart and within 2 or 3 seconds, literally 2 to 3 seconds, you can figure out whether you want to do this one or not. Okay, you ready? 5 things, not that difficult. High, low, where was it, where is it, and where is it going? Sideways down, sideways down, sideways up, sideways. Okay, that's basically what it's did for the whole year. Okay, that's not that difficult, right? So what are you looking for? Well, it's not at the high of the year, and it's not at the absolute bottom of the year, somewhere in between. So, okay, next. Here we go. Next, we're going to look at the numbers. Does it make sense to buy it? Am I reaching my goal? Now, my goal, you all know, 1% every single week. So, thank you for sharing. Thank you. You're welcome. So, if I'm looking for just 1%, well, let's take a look. Is it possible? If I buy it first thing tomorrow morning, right there, 2044. Well, if I buy it at 2044, I can sell it to somebody else at 2050 and pick up 113. Well, 113, do the math. Okay, that's over 4%. Now, if you get 4% every single week. That's 200% per year. Granted, you can't really equate because it's weekly now. You have to change your thinking nowadays. See, I'm doing it weekly, so I'm getting 1% every week. So if I have 100,000, I'm getting 1,000 a week. If I have 1,000, I'm getting 100 a week. It's 1%. Whatever you have, that's, think of 1% of that. All right, so that's what I'm getting every single week. So does it make sense? If I'm buying it at $20.40, the closest strike price, this is called a covered call. It's one of the simplest trading strategies there is. So by doing this, yeah, I'm safe because I'm buying the stock and I'm not selling it until it hits my target price. And my target price is $20.50. And that's just for this week. Because what happens if on Friday it is above $20.50? Well, I get an extra 9 cents because the purchase price is $20.41 and I'm selling it for $20.50. But this is, I'm not interested in that. I'm interested in this right here. This is called the premium. When you sell a call option, oh, my camera's freaking out. It is, that's weird. Oh, that was where the mouse was. That's what it was. That's what was freaking it out. The mouse was in this way. All right, so as I was saying, I take the premium that I collect and I divide it by the stock price. That gives me the rate of return in this instance. Okay, let's bring out our calculator to make it easier. Okay, let's clear that. Okay, so the $20.50 strike price, the premium is $113. So $113. And how much is each stock going for? $20.45. Divide $20.45 and 5.5%. Like, holy shit, yeah, I'm going to do that one tomorrow. Only if the chart is right. Because just because the numbers work, well, the chart, what's the chart telling me? Well, I would love to get 5%, but is it the right time? That's a big question. You know, the premium could be high just to get you to buy. All right, so let's get rid of this. And let's jump deeper into the chart. What is the chart telling me? Okay, so a year ago, Intel was at 44.21. The high of the year was beginning of March. From there, she drops down, goes sideways a bit, drops it again. And look at where the bottom is, right here in September. Way over here in September. That's the bottom of the year, right around 1850. Okay, that doesn't look that bad. I mean, look at the movement. Okay, down, sideways, up, down, sideways, up. Now it's coming down. Here you can actually see the current movement. Okay, so I want to look at this a little closer to get an idea of where do I think it's going to be on Friday. Because Friday's coming whether I like it or not. Can I take advantage of it? Well, yes, I'm going to. I might not be doing it with Intel, though. But we'll take a gander at it. Let's take a look. Now, what I want you, before I go on, take a look at this. Keep this in mind. Okay? This is your 90-day high up here in the 26. Here's your 90-day bottom down here in the 19. 1, 2, 3. It hits it 3 times. So that's pretty good right there. It doesn't look like it's going any lower anytime soon. The reason I say that, because we want to have an idea of where it might go next based on what's it doing now. All right, so that's doing that now. So let's take a look at the last 30 days, and today being the 26th. There we go, right there. There we go, last 30 days. Now, last 30 days, I'm looking at the exact same thing, 5 things. The high, low, where was it, where is it, what's the direction? Look, down, up, down, up, down. That don't make me feel that good because it looks like I missed the movement. Well, yeah, in this situation, it looks like I missed the movement, okay? So it should have been here. See, here's your high, drop down here, 2 days to the upside, then jump in. Well, we missed that one. Well, you guys missed that. Sorry, don't take it back. You guys missed that one. I did jump into that. So I actually do have some intel. Okay. So if we're looking at it to jump into tomorrow, I'm going to say no. Because, for me, Okay, you guys got to decide what you want to do. I'm just saying, for me, here's a 30-day high here. Looking at profit taking, it's probably going to come down back down to the 19 area. We'll take a look at it again in 2 weeks because it's going to take about a week to get down to 20, maybe another week to get down to 19 but we'll take a look next week. Oh, it's already written down for next week. Imagine that. All right. What do we want to look at next? Oh, my goodness. Jacob wants to take a look at Maine. Now, Jacob, I hate to be the bearer of bad news. Well, maybe you need to hear someone give you bad news. I don't know, one or the other. But look at this. February, March, June, September. This is what you call months. That's a monthly optionable stock, which means it doesn't fit. What I'm looking for is consistency of profitability, meaning has the company been consistently that should be self-evident. Do you do nothing with Intel for the next week? Can you say, wait a second, hold on. KK, hold that thought for 1 second while I finish explaining what I was just explaining. I forgot what the fuck I was explaining. Oh, that's what I was explaining. These are monthly optionable stocks, which means I can only trade it once a month. So once a month, well, that means I'm only getting 12 checks a year. They better be pretty fat, but they're usually not. An option trade in this manner is usually 1, 2, 3, 4%. Well, if I'm getting 1, 2, 3, 4% every single week, well, now I'm jumping into monthly. And I'm only doing that 1 or 2% every month. That drops me down to 12 to 24% a year. I'm sorry, but that doesn't work for me. And it's hard to judge where this thing's going to be in 30 days. Let's take a quick look at 30 days. Okay. Okay. Here's the last 30 days. Look at the movement. 57, 60, 50, 57, 61. It's like, okay, great. Now tell me where's it going to be in 4 weeks, because that's what you're looking at. Me, it's difficult enough to go 3 weeks. Sorry, to go 1 week because Monday, then out on Friday. See where it is now? This is a 30-day high. I definitely wouldn't be jumping into this because you go from here, 57, okay, 58, 59, 60, 61, and then a little bit more. That's $4. Well, $4, it doesn't sound like a lot, but do the math. $4.50. Okay, $4.50 on a 57. That's where the bottom was. Okay, see the bottom? 57. So if the bottom's at 57 and this thing goes up $4, well, that's just below right around 8%. That's 8% in 2 weeks. So if the stock goes up 8% in 2 weeks, do you think people are going to take profits? Well, ask yourself the question. You're sitting here in a live show showing you how to get 1% every week. This thing just jumped 8%. So figure it out. If he goes from here to here, if it's a big enough move, more than likely there are going to be profits. Going to be profit taking. That means people jumping out here saying, hey, it's up, I'm taking my profits and jumping on out. That's basically what that looks like to me. Okay? It looks like, hey, it jumps up, profit taking. Because here, the bottom shoots up, profit taking is down here, 2 days the upside, then you jump in, take up to the rest right. That's basically what I do. Because they basically go up, and then they go down, and then they go up, and then they go down. It's the same thing over and over again. So if you just pick a good company that gives you a good number on a weekly basis, I don't do monthlies because they just don't work for me. Okay? I'm looking for 1% every single week. Okay, who do we got here? So you do nothing with your Intel for the next week. No, KK. I actually trade options a little bit lower than what I paid for them when that happens. I have a couple of questions here. Sweet Jones, what's happening? Angel One, what's going on? Anthony, good evening. Ooh, IBM and Mara. Okay, let's see. Let me write it down. IBM and Mara. I have Mara, but I don't have IBM. You're welcome. So let's take a look at Mara, because I actually have it. Why not? MARA. Here we go. Leo. Okay, so Jacob want to look at Maine. We're going to say no to that one. We're looking at Mara right now, so let's take a gander at Mara. Woo! Okay, here's my high, 34. Here's my bottom, right there around 13. But basically, she just kind of went sideways all year. Okay, I'm looking for the 5 things. Here we go. High, low, where it was, where it is. Look at where it's going. You ready for this? All over the place. Basically just staying in the channel between 14 and 22, looks like. You know, between this area. Okay, fine. Now, what do the numbers look like? 1903. Well, we can call 19 the closest, right? 19. Ooh. Ooh, ooh, ooh. Look at that. I like the chart. I like the chart. Look at this, because bounce can't come down, bouncing up. Okay, we're gonna get that in a second. Hold on. But look at the numbers. 1903, and the 19 is going for $1.43. That's over 6%. And think about it. If you like this company. Now, I don't make recommendations, and I already told you I already have some of this. Okay? So it just makes me kind of think. I put an order in this morning that's supposed to fill tomorrow morning. So I'm thinking to myself, I think I might have to change it after seeing this. Okay, I'm gonna have to write that one down. Alrighty. Anyway, let's continue. All right, so the numbers look good. The chart looks okay. So let's go next. Next, well, we're gonna make this a little bit smaller because we don't need that. Well, not yet. No, wait a minute. No, this way. Yeah, okay. All right, 30 days ago, we opened up at 1734, a high of the year, 34. And the bottomed out in September, the beginning of September, 1309. All right, so last 30 days. Sorry, last 3 months. Okay, so last 90 days. Okay, looking at the same thing, okay? High, low, where was it? Where is it? What's the direction? Down, up, down, up, down, up. So it's coming to the upside. Here's the high way up here, and here's the bottom way here. Well, that is going up. How far is it going to go? It's going to go until it's done. Isn't that weird? It goes until it's done. And then what happens? It turns around, comes back. Until it's done, then turns around, goes. They go up, they go down. That's all they do. If you like a good company, follow it. It's not that difficult. You look at the 1 year, look at the 90 day, look at the 30 day. You're looking for the 5 things. High, low, where was it? Where is it? Where's it going? Okay, down, up, down, up, down, up, down, up. Okay, it's like a seesaw in the schoolyard. Down, up, down, up. Okay, anyway, just watch it and follow it. So this is the 90 day. Watch and see what happens when I go to the 30 day, because we're looking at something totally different. The 26th is right there. Watch, ready? Totally different, okay? Down, up, down, up. Now it is at the 30-day high, so it doesn't look as attractive, okay? The 90-day chart, well, yeah, it looked good. Can I ask you something? Front man, go ahead. So, if it makes sense, yeah. But if it doesn't make sense, no. I forgot to turn this one on. And let's do this. All right, so that's what I liked about Mara. Okay, just take a look at it. See, down, up, down, up. So I have some. I'm kind of curious to what's going to happen tomorrow. Just a little curious. But when I get into some more, I don't know. It's at the 30-day high. I don't like buying at the 30-day high. What do we got next? LUV. Isn't that Southwest Airlines? LUV. Southwest Airlines. Okay. We're looking for those 5 things. High, low, where was it? Where is it? Where's it going? Uh-oh. Looks like she's coming down right here. But we'll take a look at the numbers and see what the numbers say. All right. The bid, the ask, right here, 31.94. Well, that's an easy one. The closest strike price is going to be 32. And look at the number on it, 95 cents. Well, that's 3%. Well, I love 3%. Okay, fine. Well, let's see what the chart looks like. So let's get this out of the way and take a look at the chart. Here's our high, here's our low. Here's where she was, here's where she is. Look at the movement. Up, down, up. Looks like she's coming down. It does, but hey, let's get closer. Get a little closer with Aaron Extract. Okay, so a year ago, we're at 30.26. Ryan wants to look at ABV. A, B, B, V. All right, we'll take a gander at it if we get a chance. All right, so a year ago, 30.26. Jump up, big drop down, kind of go sideways, finding our bottom right here in the first week of August. Okay. Look at the last 90 days. Okay, that's close enough. Here's our bottom here, 29.80. And then our high is 36. Okay, so from 29 to 36, that's $7. 29, that's over 20%. Nice. Nice. Yeah, it's about a 20% move. Okay, then from there, she drops, retrace, drops, retrace. Okay, now it's all going to change when we go to the last 30 days. It looks like a nice place to be. I mean, seriously, take a look at it. The last 30 days. You got your 30-day high way over here. She drops down, retraces, challenges that 30-day high, actually making a new 30-day high right there. Down, up, down, up, down. Now it looks like, hypothetically, she should be gaining momentum to find the bottom, turn around, go back up. So I'd like to look at this all next week, see what a good opportunity would be. Well, it's giving a nice premium over here. You know, good, a 3% premium. But do you like Southwest? I mean, that's a big question. And we're all different here. You know, it's a couple hundred people here, so we all have a different interest. Do we like Southwest or do we not like Southwest? Okay, it is what it is. Okay, so Jacob, you want to look at gain. Jacob, you just asked me to take a look at Main, M-A-I-N, and gain, G-A-I-N, basically the exact same thing. No. Monthly stocks just don't work, G-A-I-N. Okay, a monthly. These, for me, okay, it don't work for me, so why would I want to take a look? I mean, I'm going to take a look at it and say it's going to be a no because the numbers don't work for me. I'm looking to get 1% a week. I can't do that with a monthly. Okay, so I would be wasting my time for me to look at a monthly just for it to be a no because I already know it's going to be a no before I even go in. All right, anyway, let's keep on going. I'm looking at DOYU just to make a dividend play. Leo, I've never heard of that. DOYU. All right, you have fun with that one, brother. Has no dividend, has no options at all. So that's going to be a no. It's a special dividend. That doesn't, no, sorry. Bank of America, that's a yes. But where is it? Well, let's take a look. 5 things we're looking for, remember? High, low, where was it? Where is it? Look at this. Up, down, up. What's happening here? That's what I want to see. Okay, but before I do, let's take a look. 40.26. Well, the 40.50 is going to, sorry, 46.50 is going to be the closest. The 46.50 is going for 53. Well, that is over 1%. Okay. Now, know what we haven't looked at yet? We haven't looked at the seasonality chart. And I'm going to get to that in a minute, but let's check the numbers over here to see is Bank of America a good deal this week. A year ago, we're at 33.48. The bottom of the year was the second week of February. That was 32.53. Well, from there, go to the last 90 days. There we go, the last 90 days. This is what we're looking at, and we have the high of the year here. This is the high of the year. Okay, but in the 90-day period, well, it's the same thing. High, here's the low. Look at the movement, down, up, down, up. Well, what's going on here? Now, when we switch to the 30-day chart, all this is going to change, and we'll be singing a different tune. Because, yeah, great, that's 90 days ago. That's 3 months ago. Okay, what does that mean? That means absolutely nothing now. It just gives us an idea of the momentum. Okay? So now that's 3 months ago. I want to know what's happening now, and most likely, where does it look like it's going tomorrow, the next day, and the next day? Because if I'm going to do a covered call on Monday, sell the option Monday morning, well, I'm looking for my profit. Well, I'm just telling you what I'm doing. It works for me, so I'm just showing you if you were going to do the same thing. If I look at it and the numbers make sense, okay, do I like this company? That's the next logical question. All right. First, let's go to the last 30 days, because the last 30 days, this chart's going to sing a totally different tune. You ready? Here we go. Okay, totally different. Okay, we're over here at 44, drop down to 43, shoots up, back up, back down. Here, it looks like it's turning to go back up again because she's in overall upward motion. It's not that difficult to see, you know. We're here, we dropped down a little bit, went up, came down a little bit, went up, came down a little bit. Now she's going up again, but in an overall upward trend. Now, does that make sense? Well, it's Bank of America. They've been in business for over 100 years. I'm going to get 1%. What does the stock have to do? It's basically got to stay where it is or go higher. Well, if it stays where it is, yeah, I'm going to make money off of it. Okay? It could do absolutely nothing, and I will still profit. Now, a lot of people say, wait a minute, how can that be? Well, it's just the way the trade is. Now, remember, if you've ever seen any of my videos, it's always, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So the trading strategy has to be 10 minutes or less. Okay? Well, fine. Okay, I created it for my 9-year-old. It had to be simple. Safe, predictable, consistent, and no way for her to lose. So those are my challenges. So here's the 5 rules. Rule number 1, never buy something you don't understand. Michael, hold on 1 second. Number 2, never sell at a loss. It doesn't make any sense. I don't know why people do it. Number 3, make sure the company is consistently profitable. Why would you put your money into a company that's losing money or not profitable? This will always boggle my mind. People put their money into stuff that's not consistently. Okay, never mind. Number 4, weekly options a must. And number 5, do the numbers work? What do I mean by the numbers? What am I buying it for? What strike price am I selling it? The premium I'm collecting, is that 1% or more? If it's 1% or more, great. What's the chart telling me? The chart's telling me it's either too high or it's too low. Which direction is it going? Well, it looks based on, you know, the schoolyard principles. It goes up, it goes down. It goes up, it goes down, okay? It goes down, it goes up, down, up, down, up. Now, what do I mean by up? Well, you got a bottom here, 2 days to the upside, okay? You got a top here, 2 days to the downside. It's you can figure it out however you want. You know what? I'm going to show you something that might make it easier. We're going to go here to Style, and we're going to change the chart type. What do you think? Is that easier to read? It looks easy to read. Down, up, down, up, down, up, down, up. See? The line chart's easier to read. But the line chart doesn't really tell you, well, what's the high of the day? What's the low of the day? What's the momentum? Also, it just tell you the direction. Okay? All right, anyway. Let's get back to where you once belong. There we go. All right, that being said, I like Bank of America. What we haven't looked at yet is the seasonality chart. Now, if you're not familiar with the, oh, this should be a good one to record. Here we go. If you're not familiar with the seasonality chart, well, let's break it down a little bit. All the way over to the far right. Sorry, your right, my left. Nope, my left, never mind. All the way over to the left. January 1st. All the way to the right, December 31st. Now the blue line, way over here, can't really see it, but the blue line, that represents this year's movement. Okay, we're into January, that's why it's still in the first square. We're going to zoom into it a little bit, so hold on for a second. The red line represents the movement throughout the year on an average over a 10-year period. 10 years. average. This is what it normally does. Well, we're right about here. So what can we expect next out of Bank of America? Well, the easiest thing to do is to zoom into this spot right there. So let's do that. Okay, that's where we are right now. Now, this is just what the stock normally does in a 10-year period, the average, the moving average. So from here, which is today's date, going this direction, she's basically going to stay flat, go, just flat. Woo, look at that, thank you. So she's going to go flat, and then towards the end of the month, she's going to go up, hypothetically. This is just over a 10-year period what its average movement was. Well, what good is that? Well, it's kind of like a rear view mirror in the car. As you're driving forward, you have no idea what's ahead of you, but you know what's behind you. And if you ever, oh, that's lovely. I've never seen that. That was cool. I have no idea who sent that. So, threw me for a loop. Forgot what I'm talking about. All right, let's move on. Seriously, I forgot what I was talking about. Okay, I'm going to answer Michael's questions. Hi, my friend. Mike from Australia. How it be down there? Down under. Living in the land. Okay, I know you do trades in TG on TGE. Run up to the dividends. Okay. I need a basic video of your system. I haven't quite got the capital start. You get 25 grand. Oh, Michael, we all start different. We all start at a different level. Doesn't really matter where you start. It's the consistency. Okay? Okay. That's all you got to do. It's just consistency. If you throw the 25 in there and consistently do the same thing over and over and over again, the biggest challenge, we're going to have a couple of big challenges. Challenge number one, greed. Greed gets to everybody, especially when you're just starting. Okay, you see something and you say, "Ooh, I want a little bit of that." Yeah, by doing that, yeah, you're giving up your plan for greed, and it can at times bite you in the butt. Now, I understand this strategy is extremely slow and extremely boring, and it's only 1% a week. Okay, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. It's slow. It's boring, it's monotonous, it's the same thing over and over and over again. If you've seen the trades I've done over the last year, it's the same companies over and over and over again. And the reason being, because there's only about 300 companies that actually are consistently profitable and have weekly options. So why would you not put your money into a consistently profitable company? Yeah, I know these shiny little objects, the new stocks, they burn bright and they fade fast. Those ones. Yeah, finding them. Yeah, you might find one or two in your lifetime. Okay, but I don't think I've ever found one, and I've been trading for 20 years. Well, it is what it is. Anyway, so yeah, this is boring. This is monotonous. The same thing over and over and over again. But if you're okay with that, it's kind of like brushing your teeth, putting on your hanging your house coat, taking a shower, shaving, whatever you do in your morning ritual, you just add one more. Okay, everything's done. Get my coffee. I'm sitting down for breakfast. Let me sit down in front of my computer. 10 minutes. That's all you need is 10 minutes. Because it's not that difficult. It was specifically created for a 9-year-old to be 10 minutes or less. Now, 10 minutes or less is only about an hour a week. For 1%, well, it depends on how big your account is. The bigger your account is, that 1% looks lovely. All right, so let's keep on going. Well, now that was kind of weird. Camera angles facing the lamp. That was funny. Ooh, Sweet Jones wants to take a look at Kroger. But I do like Bank. What was our? Wait a minute. Wait. We're still on Bank of America. Hold up. Let's finish it up. So yeah, do you see where it is right now? This is where it is. So usually she's going to go flat and then up. Well, great. Well, the company's over 100 years old, okay, and you're getting your 1%, or more than 1% on the premium. So the question comes down to it. Number one question, does it make sense? Number two question is, do I like Bank of America? I personally don't like Bank of America but I like the Bank of America stock. Okay? See, I have an account in Bank of America, so I can say that. Anyway, let's get back out of here. And let's go take a look at the numbers. Now, currently, Bank of America is at 46.26. So the closest one is going to be the 46.50. Okay, and that's paying 53 cents. Now, the 53 cents doesn't sound like a whole hell of a lot, but it is over 1%. Okay, that's like the movie Moneyball with Brad Pitt and I forget the other, Jonas, I forget his last name. Anyway, they wanted to get rid of the okay, hold on, Michael. Can you link your basic videos so that I could do some homework? Thanks, mate. Because I'm upside down. Oh, sorry, Michael. Sorry about that. Hey, Michael, here's an idea. You're on YouTube right now. Okay? You go to YouTube, okay? Go to my channel, which you're already on, and then take a look at all the videos. You want to go to the older ones, like 10 years and old. Because you have the opportunity. You hit the video, and then you hit oldest first. Because all the new ones are basically all this. Okay? But the older ones, those are the basic tutorials how to do stuff. All right, so where was I? Bank of America. So let's actually do a trade. Actually show you, actually walk you through it and show you how the numbers work. Okay, now we've already seen the charts. We've already seen the numbers. It's over 1%. Well, great. Let's actually do one. I'm not going to send it through, but I'm actually going to do it and go all the way to that point. That way you understand the mechanics of it and how the numbers work. Let's do this. All right, so let's get rid of this. Let's change this to covered call or covered stock. Same thing. Now remember, the stock right now at this moment in time is right here at the 46.26. Right, 46.26. Right, the closest one is the 46.50 right there, and I want to buy the covered call. See, if you see the little tiny box where it says buy, if you go over the other side, it says sell. Yeah, you don't want to do that. $46.50. Now, I'm going to ignore your question about SMCI, because when I ask people if you want me to take a look at a stock, I ask you politely to take a look at the numbers. Does that stock actually have consistently increasing profits? And do they have weekly options? I'm pretty sure SMCI doesn't. Not that I'm ignoring your question, I'm just letting you know. It's not going to fit. It's just a waste of our time. Waste of my time. Anyway, $46.50. So if I'm going to buy that one, here from TikTok, Candy, how are you? Okay, so here's the order right here. Okay, I'm going to change it from 10 to 1. That way, whoops. I'm going to hit it to 1. Just one contract. That way you have an idea of what it goes for. Now I'm changing it from a limit order to a market order. Reason being, okay? One contract that we understand what one is going for. So if I'm making this amount for one contract, well, if I buy 5 contracts, if I do 10 contracts, so on and so forth, this is going to be a call. It's going to be a covered call where I buy the stock and I sell the call option against it. Okay? Now, one at the market, and the reason why it's at the market is because I want it to fill instantaneously. That means first thing in the morning when the market opens. All right, that video is done. Let's do another one. Come on, hold on. Save it to draft. There we go. Now let's start the recording again. There you go. Alrighty. So, that being said, let's hear the order and let's see everything as it's working. All right, here we go. This is the order itself. Are you buying both Bank of America? Then putting a call, selling a call. Joe Grinda, how are you today? All right, let's take a look at this. Here's the order. You ready? Buy 1 covered call Bank of America. 31 January 25. Well, the 31 January 25 is next Friday. That basically means I'm buying the stock first thing in the morning when the market opens. Then immediately Whatever price I'm buying it at, I'm going to sell it to someone else for that almost exact same price and collect $78 per contract. Let's walk through it so you understand what it all means. Okay? Buy one covered call, Bank of America, BAC, 100s, those are the weeklies. 31 January 25, that's next Friday. Next Friday at 3:59 p.m., if this stock is above a certain price, Michael, hold on one second. If this stock is above the 46.50, well, it's 45. Wait a second. Well, it's at 46.52 now. Okay, yeah, that's the, sorry. I was reading the wrong number. It's at 46.52 now, and I'm selling it the right for someone to buy it at 46.50, which is a little bit less. But look at the premium I'm collecting. I'm collecting a nice premium, and that premium's over 1%. And that's what I'm looking for. Simple, safe, predictable, 1% per week. So basically, I'm buying it for $1, I'm selling it for $1, and I'm collecting the premium, kind of like a middleman type thing. I know, kind of. I don't know how you want to describe it. But the factual is, you buy a stock, you're selling somebody the rights to buy it from you at a certain price by a certain date. That certain price is called the strike price. The certain date is called the date of expiration. In this case, we're using 31 January 25, which is next Friday. So we do it every single week. The same thing, over and over and over. That's where you get these safe, predictable, I know exactly what I'm getting, consistent, I'm doing it every single week. Okay, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Okay, so I got a question over here. Michael, you are a legend. One last question. Is that your full-time job, or is there any chance you could check out a penny mining company? The initial sale, I understand if you can't. Okay, Michael, it's not that I can't. It's just that we'd be wasting our time looking at it because it won't fit into what we're looking for. And what we're looking for is a dividend stock company. That means a company that shares their profits for at least 2 decades. That's 20 years. And them to be profitable every single year after year after year. Okay, there's plenty of companies out there. And I welcome any new company that wants to join the 20-year or more consistent profitability. Now, it just so happens to be January, which means the new lists are coming out. The Dividend Kings list, 2025. The Dividend Aristocrats list, 2025. The Dividend Champions list. The Dividend Champions list, 2025. The Dividend Contenders list, 2025. And then Warren Buffett's list, 2025. Okay, now if there's another trader or investor that you respect and you want to follow what they're doing, that's great. But let's keep on going. So as I was saying, the maximum profit on this one trade is $78 per contract. One contract, $78. 2 contracts, then you just start multiplying it out. Okay, so the break even, 45.72. Well, the stock's currently at 46.52. So if it's above 45.72, I have some type of a profit. Okay, so if the stock goes up, profit, stock stays the same, profit, stock can even come down a little bit, and I still have a profit. I love these kind of trades. Okay, now granted, if it goes below 45.72, I don't have a profit this week. But what do I do have? Well, I do have the $78, the premium, and the stock goes down a little bit. What do you mean concentrated position? Uh-oh. Steve, hold that thought for a second. What was I saying? Oh, yeah, if the stock comes down a little bit, yeah, I'm still making money. But here's the thing. Uh-oh. Even if the stock goes down a little bit, I still get to own the shares. So they're always mine, so I can always do whatever I want to do with them. Okay? So as the stock comes down, yeah, I still own them. I still get to collect the dividends, and I get to write another covered call on it. It might be a little bit less, but it's still money coming in consistently. That's what I'm looking for, consistency of profitability. Okay, Steve, what do they mean by concentrated position with the PNR inside the EPR? Well, that's a good question. EPR. You gotta let me know what is PNR and what is EPR. Okay, when you get to a certain age, there's so many different industries, they all have their own acronyms. So I have no idea what those are. If I was looking in Australia. I need to do, understand I need to do homework. Yeah, okay, that's funny. All right, so let's keep on moving along. Holy cow, I got 99 questions to answer. Never a good thing. 99, and I will get to each and every question. So if I'm a little slow getting to your question, I apologize. There's a lot of people here. All right. Oh, all the way back there. And good evening. Did that one? Did that one? Okay, I've got that one. That one. That one. That one. Okay, we did that one. Did that one. That one. Oh, and here we are right here. Hey, Texas Brown-Eyed Girls in the house. Scoot Magoot. Cool. How are they making profits? Okay, Chris Fonseca, I'm going to apologize. The question you asked a long time ago, don't know which one we're talking about. Candy, do we set up a call, buy contracts the 31st at 3:50? Okay, I'm going to have to get back to you on that question because it came and went so quickly I didn't get to see it. Hold on. What was that question? It looked interesting. Do we set up the call to buy contracts on the 31st? Oh, you mean buy at close? Is that BOC? Yeah, buy at close. Or do we sell a call 359? Hello, James. Candy. Hold on. James, how are you? Now, what we do on Friday afternoon, Candy, okay, the positions we bought on Monday, well, what are the options that we sold? Okay, how close is it to the current money? Wow. I had 2 days off and I lost my voice. Isn't that weird? I didn't do any talking over the weekend. On the Bank of America, in red and white, the order placed in the account into a concentrated position due to PNR and all that bull. Okay, what are we looking at? I'm still at a loss, dude. PNR, what are you talking about specifically? In the red and white. Okay. Oh, okay, here we go. Now, following the order is expected to be placed in the account into a concentrated position with the PNR inside the ER. Okay, concentrated position might be higher, blah, blah, blah. Oh, that's just some information on what kind of trade that I'm doing. Doesn't mean anything. All right, so let's do the numbers on this one. So I didn't know what he was talking about. Now I get it. I get it. Still doesn't mean anything. I'm sure it means something to somebody, but not to us. Let's clear this out of the way. All right, so here's the trade we're looking at on Bank of America. Buy one covered call, Bank of America, 31 January, so on and so forth. Okay, now, the profit on this one is $76 per share. I'm sorry, $76 per contract. So I put the 76 into the calculator. And I divide it by what is the trade going to cost me? 4,574. 4,500. 574. That's only 1.6% for the week. But the same thing, do you like Bank of America? Well, 1.6 is not bad. Okay, 1.6 is right around 75% for the year. 1.6 per week. So 1.6 per week is about 75% per year, maybe 80% per year. I could deal with that. But anyway, ask yourself the question, do you like Bank of America? Okay. Let's go to the next. Next. Get out of there. Get out of there. Get out of there. Go back to here and go back to here. Back to where we started. All right. What ticket was that? That was Bank of America. Hey, James, how NEE? Ooh, Rude Dude wants to take a look at Nextera. N-E-E. N-E-E. Could you tell me the process again? I want to buy my stuff. All right, Candy, hold up. I will get to it again. Okay, you will see it again very shortly. So Nextera Energy is on my list. So let's take a look at the numbers. The high, the low, where was it? Where is it? Look at the movement. Down, up, down, up, down, up, down, up. Simple. Not that difficult. Now, from there, before we look a little deeper in the chart, what do the numbers look like? Because I don't want to waste time, because it takes like 2 or 3 seconds to look at the chart. Okay, high, low, where was it, where is it, what way it's going. That's it. It takes like 3 or 4 seconds. High, low, where was it, where is it, what direction is it going? Okay, now over here, what am I buying it for? 71.46, right there. What am I selling it for? Well, we have 2 choices this time. Now the reason we have 2 choices this time, because its stock is over 50 bucks. So now it's a dollar increment. So it's 67, 68, 69, 70, 71, so on and so forth. And the stock is currently at 71.46. So we can look at the 71 or the 72. Now, the 71 is a safer trade, but the 72 more than likely is going to be more profitable. But on the 72, the stock has to go up. 71, less profit, but the stock doesn't have to do anything. It can stay exactly where it is and do absolutely nothing, and you still make over 1%. Those are my favorites. Anyway, let's take a closer look at the chart because the numbers all worked. Slide this over, just to move it on over. Okay, a year ago, Nextera, 58.65 a year ago. The bottom of the year was in the beginning of March last year. That was 54. From there, here's the high right here. Check this out, Nextera. The high of the year, 86.10. And that was in the beginning of October. Okay, last 90 days. Look at the movement in the last 90 days. Here's our 90-day high about 90 days ago. She drops, retrace, drops, retrace, drops, retrace, back down, back up. Okay, so great. Where's it going? Well, on a 90-day, okay, for the last 3 months, slowly going down. Now, the last 30 days, the last 1 month, everything changes dramatically. Let's take a gander. Okay, looks totally different. 30 days ago, we're way up here. Okay, drops, back up, drops. Now we shoot and have a new 30-day high Friday. So Monday, this does not look that appetizing. To me, anyway. Okay? Always take a look. Never blindly listen to some bonehead online. Do your own research. I can just give you ideas and whatnot, but I can't tell you what to do, and I like people to do their own stuff. Anyway, Nextera. Let's take a look at some of these questions. FI. Can do for. What is FI? Fiserv. I never heard of them. FI. Wow. Let's take a gander. Yahoo Finance. I've never heard of this company. FI. Fiserv 208. Oh, that's why I've never heard of it. There's no dividends. There are no dividends in the selected time period. So why are we looking at them? Who said that one? All right, you can do for, dude, you've been here long enough. Seriously, you have. Fiserv is a financial service tech company. Yeah, Candy, I get that. It's a no. And the one who suggested, he's been here long enough, he should know better. Rubmo. Oh, Rubmoto. Siri wants to take a look at Siri. Now, I actually do have some Siri. S-I-R-I. Oh, blah, then. Here we go. The high, the low. Where was it? Where is it? Where's it going? Down, up, sideways, down, sideways. 2173. The 2173s are going for 2266. That's over 3%. Ooh, I like 3%. Hold on. Just hold on. We had a question over here in YouTube. YouTube. Okay, so that's where we are now. You got to decide, are you okay with that? Because this is what happens with stocks. They can lose 50% of their value. Okay, they have a high of the year. They have a low of the year. They all do. So you have to decide, if I'm going to jump into this, well, it's at 22. The high is 55. That is a 50% drop. Are you okay? Are you prepared to jump into something and maybe have a 50% drop? Okay, you got to ask that question because it is possible. But if that's your concern, always get familiar with your financial website. Okay, what were we just looking at? Siri. S-I-R-I. So hold on, I'm going to show you something. Get familiar with financial website. You get to see what they're doing. Okay, so the dividends are kind of like weird. Now, the reason why I'm looking at Siri, not that it fits in my trading style. Siri's in what's his name? Warren Buffett's. Okay, this is from his list. This is one of the reasons why I'm doing Siri, because it's in his list. All right, so that's not really what I want to see. What I wanted to see is here, statistics. Because if you're buying something, you want to have a good idea. Well, what is the actual value of the company? Well, we know what the high is and the low is of this year. Well, what's the average movement? Well, this gives you some information on the company. Okay, profitability, profit margin, operating margin, blah, 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 return on assets, blah, 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 all that kind of nicey stuff. But what I'm looking for is down here, down to the bottom, right there. Book value per share. Do you see that? If this company was ordered to liquidate tomorrow, this is what you'd expect to get back for each share of your stock, each share that you own. 3203. There's a number right there. Book value per share, 3203. Well, do you see what the stock price is at? Let's get this out of here. Okay, the stock price is currently at 22. Okay? Now, that I find to be a safety factor because it's worth more. Now, I'm going to show you something that you're might be a little disappointed in. Might be, some of you. Hot stock of the moment. NVIDIA. It's a hot stock, right? Everybody loves it. Well, it's $142. It has a book value of $1.74. This one's not on my list. Okay, $1.74. It's a $140 stock. But wait, hold on. It gets a little worse. Okay, if you're not familiar, yeah, it gets a little worse. So let's go back to here. NVDA. Here we go. Okay, not in January. Not in February. There it is, right there. Okay, so what is that? The 13th, 12th, 11th, 10th. Week 10 of the quarter. NVIDIA. Now let's click on NVIDIA and see what kind of a dividend NVIDIA is paying. Oh, that was last year. It's 4 cents. 4 cents. So it's not going to be posted for this year yet. Summary, here we go. So let's find some more information on NVIDIA. Okay. Forward dividend and yield. 4 cents. Well, you got to divide that 4 cents by 4. You're getting a penny a quarter. Okay? Now look at the rate of return. 0.03%. That's not even a tenth of a percent. That's 3/100ths of a percent you're getting on NVIDIA every year based on the numbers. Okay? I don't like NVIDIA. I don't like the numbers. They just don't work. All right, let's get out of that one. That's a depressing one. All right, next on the list. Oh, Hollywood wants to take a look at Walgreens. And here we go, Walgreens. Take again. Now I do have some Walgreens, just to let you know. Here's our high, here's our low. That's where we were, and this is where we are. Okay, follow the yellow brick road, down, sideways, up. That's the trend. That's where it is now. Look at the high, 24 bucks. Right now it's at 12. That's a 50% drop. Okay? If you're not okay with those kind of numbers, you're going to jump in and the stock's going to go down. Or you'll jump in, the stocks will go up. But don't worry, it's going to turn around and go the other way. It's what they do. They go up, they go down, they go up, they go down. That's the roller coaster. Jump on, get your profit, jump out. Jump in, take your profit, get out. That's just my philosophy. That's me. That's what I want to do. I don't want to hold anything long term because I'm looking for weekly cash flow. See, every time I make 1% per week, well, that helps pay my bills because I'm retired. No desire to go back to work. None. Let's do this. Ready? 187 is the current price right now. The closest strike price is going to be the 12. And the 12 at this moment is going for 20 cents per share. Well, on a $12 stock, we're looking to get 12 cents. 1% of 12 bucks is 12 cents. Okay, so that's what we're looking for. It's currently at 20. That's more than 1.5%. Great. Let's see it. Now, we want to take a better look at the chart, so we're going to get this out of the way. Okay, click and drag. Click and drag. There we go. The chart is on fire. Okay, a year ago was our high of the year, about 23.76, somewhere in that area. And then she just kept falling. Now, I traded this thing all year long. Okay, I bought up here. Okay, I bought here, I bought all over the place. Oh, I see what you're doing. Glad you appreciate it, Candy. So as she's falling, we're trading every single week, making more than 1% every week. This is like one of my best performers last year. Okay, but look, it's here and it goes down. Well, how can I say it's one of my best performers? Well, because the numbers just worked out that way. I'd buy it on Monday, most likely get out by Friday or the next week, and get that nice little return. When I say little, it's little. 1% a week is not a lot. Okay, but here's the thing. Once you get your account to a certain size, 1% a week, well, that's 50% per year. So if I have 100,000, okay, I'm getting $1,000 a week. If I have 50,000, it's $500 a week, somewhere in that area. But by the end of the year, okay, my 100,000 went to 150. That's if I was, what do you call that? Compounding the interest, But no, me personally, I'm using it to live on. Okay? All right. Here we go. Year ago. Last 90 days. Wow. 90 days, 12, 11, 10. Yep, right there. Okay, so here's our last 90 days. We're still looking for the same thing. Same five. The high, the low, where was it? Where is it? What's the movement? Okay, sideways, up, down, up. Well, this here is going to change as soon as you go to the 30-day. But the 90-day, well, it doesn't look that bad. Okay? So, last 30. Okay, here's the last 30. See, sliding down here in the bottom, shoots up, pulls back, and now we have 1, 2, 3, 3 days to the upside. Because it looks like we're jumping from this range here. Well, now we might be into a new range, and now she's going up from this bottom here after the gap down. Okay, does it look like it's going up? Okay, yes it does, because here's the bottom here. Here's your high, then she drops. Now, we're not discounting what happened over here, because this is the 30-day bottom. Low of the 30 days, she goes up, pulls back. Now, eventually, in a couple of weeks, all this will fall off, and this will be the new 30-day bottom. But that will be in a couple of weeks, depending on what she does here. So yeah, it's in a 3-day upward trend at the moment. So the question, do you like Walgreens? I love Walgreens. That's me. Okay? Now, I've been making over 1% every single week on Walgreens for almost a whole year. Well, why wouldn't I continue doing it? Well, I am going to continue to do it because I still have it. All right, anyway. Let's take a look at the numbers closer. I got closer gander at the numbers. 1187 at this moment in time. Okay. The closest strike price is going to be the 12. So let's do one for the fun of it. Yay! It's 10:30. We have an hour to go. And I still got a whole shitload of questions. All right, let's get rid of this. Go to here. Covered call. Okay, we're currently at 1187. The closest strike price is going to be the 12. Okay, buy that one right there. Okay, just one contract. There we go. At the market. The reason why I do it at the market, this way it fills instantaneously first thing tomorrow morning, the maximum value of time when you're selling an option, because that's what I'm basically selling, is the time value. Because the stock price, even if the stock goes down, I'm still making money. So it's not the stock price, it's the time value. So if I'm getting 1%, now remember, on Monday, well, you get the whole week. You get Monday, Tuesday, Wednesday, Thursday, Friday. That's 100% of the time value. Okay? When Monday's gone, then we're looking at Tuesday. Well, now I just lost 20% of my potential earnings. That's why I want to do it on a Monday. Because on Tuesday, well, now on Wednesday, I have 3 days left, which now I lost 40% of my potential time value. Because I'm buying it first thing Monday morning, 9:30 a.m. The maximum amount of time is when they open first thing Monday and they close last thing on Friday. 9:30 a.m., 4 p.m. on Friday. That's the maximum amount of time. You can't get any more. So if I'm getting filled first thing in the morning at the market price, the reason I do that is because the option and the stock are tied together in one trade. The number's already there. So remember, let me go back to my videos. When I say, hey, this is James from Dividend Stock Talk for a simple, safe, predictable, okay, I already know what I'm going to make. Consistent, well, they do it every single week, and then no way to lose. Let's go take a look. Okay, confirm and send. Here it is, right here. Buy one covered call, Walgreens 100s. Those are the weeklies. 31 January 25. Well, that's this coming Friday. Okay, the $12 call option on the Walgreens stock at the market to open the order. Okay, what's my maximum profit? $34. How much is it costing me? $1,166. Well, what percentage is that? Well, let's find out. Get me trusty old calculator. Maximum profit, 34 bucks. 34. What is it costing me? 1,166. 1166. And that gives me a grand total of 2.9. So that's almost 3%, 2.9%. Well, that's not bad at all. That's like 150% per year. Well, that's nice. But is it worth the 5 or 10 minutes every day? Because this is not free. This is not, just set it, forget it. No, this is your money. If you don't pay attention to your money, nobody else is going to, unless you give that responsibility to someone else. There's nothing wrong with it. I mean, they may be good people too, but it's almost for certain they don't share the same attachment to your money that you do. Nobody has more interest in your money than you. So if you're doing it yourself, fine. Learn what to do. Now this strategy here, like I said, was created for my 9-year-old. It had to be simple, safe, predictable, and consistent for her because she's only 9. And then it had to be less than 10 minutes because how are you going to keep a 9-year-old's attention? This doesn't work that way. So anyway, let's move on. That's Walgreens. I like Walgreens. I actually do have some Walgreens. So let's get out of here. Get out of here. Get out of there. Get out of everywhere. There we go. And back to the beginning. Okay, back to where we started. Let's get it started in here. Ooh, Angel One wants to take a look at Dell. I love Dell. I don't have any at the moment, but I still love it. Ooh, look at that. That chart doesn't look that bad. Candy, so do we need to look, do we need to look at our portfolios every day just to make sure the stock is performing? Is that a 5-minute per day? Well, here's the thing. My hair looks terrible. At least I still have my hair. I should be happy. Okay, so here's the thing. Now, I've been doing this, me personally, for about 20 years. You know, because you get a big fat chunk of money. You got to put it somewhere. You either give it to someone else or you do it yourself. So I decided to do it myself because I'm cheap. Call it what it is. Frugal? I don't know. Wise? I don't know. Got to be one of those words. But anyway, I didn't want to pay someone. And what they were offering was absolutely horrible. What do you mean 6% after X amount of years? Oh, hell no. Anyway, the numbers just didn't work, so I had to figure out something for myself. It wasn't from my daughter who said, Daddy, can you teach me what you're doing? Back in 2008. She said, Daddy, what you doing? Can you teach me? And I was like, okay. Simple, safe. So anytime I say, look at the numbers. Are you investing your money in the right place? Now, this is not for everyone, and I'm perfectly okay with that, you know? But it's a simple strategy. It bothers me when people say, well, there's no way, there's no opportunities out there. Well, they're everywhere. You're just going to be open to changing your thinking. All right, so let's take a look at Dell. I like Dell. Let's take a quick look. Here's the high, here's the low, here's where it was, here's where it is. Look, it's up, down, here's where we are. It takes less than 2 or 3 seconds. It's not that difficult. High, low, where was it, where is it, what direction is it going? Up, down, down. That's just the 1-year chart. Make it simple, make it quick, because we don't want to spend all time here. You know, I want to just look at my account in the morning and say, hey, everything's good. Let's go on to the next one. Dennis, how are you doing today? All right, so let's go. Ooh, we need to take a look at the numbers. Okay, so the chart's okay. Let's take a look at the numbers. 110.66. Okay, well, the 110s are going for $4, but you're losing 66 cents right off the top. Well, is that such a bad deal? I mean, think about it. If this is my purchase price, 110.66, okay, right there, okay, if that's my purchase price, if I sell it to someone else, hold on. If I sell it to someone else for almost the exact same amount of money, the 110, right here, I get to collect this amount right there, $4. So my effective sale price would be the 110 strike price plus the $4 premium. So that's 114. So I'm buying it at 110.66 and I'm selling it for, you combine the two together, 114. It's just a profit. It's simple, it's safe, it's predictable, and it's consistent. That's what I'm looking for. Okay, so the numbers work. $4, that's a nice premium, okay? On a $100 stock, yeah, that's right about 4%, maybe a little bit less. But anyway, let's keep on keeping on. Let's keep on keeping on. Got to make the best of. All right, so let's take a look at the numbers. A year ago. A year ago, we're sitting at 83.90. And our low of the year, well, that was the end of February last year at 80.77. Okay. Well, here's the top, 179.70, and that was the end of May. From there, she drops, retraces. Here's the last 90 days. Now, the last 90 days, we're still looking at the exact same thing, and it should take you 3 seconds. Okay? High, low, where was it? Where is it? What's the movement? Up, down, up, down, up. Okay, not that difficult. Okay? Now, is there a pattern? Yeah, I see it. So here's the high, here's the low. Now, let's go to the 30-day, and we have a better idea of where we can think it might be going. Now, for those of you guys still asking questions, I haven't gotten to them yet. I am going to answer every single question. So, only ask the question once. I will get to it. There's a lot of people here, so let's, be courteous to everybody involved. Here we go. Last 30 days. Look at that. Doesn't that look nice? Down, up. Here's the 30-day high. Down. Here's our 30-day bottom. Now she's going to the upside. Very slowly, but still going up. Okay, so that looks like a yes to me. But before I make up my mind, I want to take a look at the seasonality chart. What is that? Well, how does it normally move? Now, this doesn't predict where it's going to go. It just gives us an idea of what does this company normally do every single year. Okay? January 1st way over here, December 31st here. The red line represents the normal path. What does it normally do? Odds and probabilities. If they did the same thing over and over and over again, well, it's a computer company. What do? They make chips, they make computers, they make whatever they make. So it's basically the same year after year after year. Okay, up, down, up, down. Okay, but a nice steady trend from the beginning of the year to the end of the year. Basically, if you bought it in January and you held it until all the way to the end of the year, you'd make money based on 10 years worth of history. Okay, they basically do the same thing. All right. What does it look like it's going to do for the next couple of weeks? Click, drag right there. Basically, it looks like she's just going to slowly go to the upside. Well, that's a yes for me. All right, so let's get out of there. Whoops, I have to change it first. Got to change it before I get rid of it. Back to a normal chart. There we go. All right, so the 110.66 is the current price. The 110s are going for $4. That's more than 1%. The seasonality of the chart looked fine. The 1-year chart looked okay. 90-day chart looked okay. And even the 30-day chart looked okay. So everything looks good and the numbers work. So last but not least, we finally hear, do I like this company enough to buy it and hold on to it? James, at expiration, your call is in the money. Do close the whole position and take the loss on the call, or keep the profits on the stock rise? Oh, James, interesting question. Now, I don't know how much sense it's going to make to you at this moment, but see if I can explain it in a manner that might be better for you. Now, on Monday, we buy our stocks, and hopefully we're out on Friday. We're hoping for it to stay the same or go up. Okay, stocks only go 3 ways: up, down, or kind of level, sideways, people call it. All right. I forget the question. Shit, damn it. Don't get old. It's no fun. Let's go back to what his question was. At expiration date. Okay. Oh, yeah. The Friday. Okay. Okay. There we go. That's an easy one. Why didn't I know that? All right. I'd like to buy on Monday, be out on Friday. Now, here's a little dilemma, and hopefully this might help you out. I cannot answer the questions of what am I going to do on a Friday on a Sunday night. Okay, so tomorrow, Monday, is when I usually I make my buying decisions on Monday. Well, because I'm from that generation where we got up in the morning, we went to work first thing Monday morning, and we got paid last thing Friday afternoon. Well, that's basically the same thing I'm doing now. I jump into my stocks on Monday morning. I like to be out of them Friday. So Here's the dilemma. When I jump in on Monday, I like to think it's going to go the direction that I like to think it to go. However, we don't know what's going to happen between Monday and Friday. So on Friday, okay, hold that thought. Okay, Angel 1, hold that thought. So on Friday, I have to decide what's the best choice for me to make. What did I buy the stock on? What did I buy the stock at? What covered call did I sell? What is that at? So if it is down, I will have to check the numbers and balance it out. If it went up, I probably just let it go and be back into cash the following Monday. So needless to say, I'll give a quote from John F. Kennedy. We cannot answer the questions of tomorrow with the knowledge we possess today. So it's a good question. What do you do? Well, you have to take a look. What did I buy it at? What's it at now? What did I sell? What did I collect? What's that at now? What is the best position for me to take today to ensure that I'm consistently profitable and I don't take a loss on Friday? That we answer on Friday. Until we see those numbers, it's hard to say, okay, this is what I'm going to do, because it's different all the time, because these numbers change constantly. All right, next. That was a good question, though. Angel. Dell is selling for $113.72, so I'm confused when you say you're selling 110. He's got a point. See, Angel, people make mistakes. I just made one. He's right. What the hell was I thinking? $110. Oh, okay, Angel, hold on a second. $113.72 was the last traded price. See that? And it was actually $113.73. Okay, you got $113.72. I got $113.73. That's the last traded price. Okay, the bid, $110.61, and the ask is $110.66. Okay, so if I'm looking at the $110.66, I can sell the 110s for $4. But there's a big difference between the last price, okay, $113.73, and the current bid and ask price. Okay, so yeah, I see what you're saying. Okay, the 113.72. Yeah, I see what you're saying, because that was the last traded price. The last traded price, that what it closed at on Friday. Okay, but if you're going to buy or sell, you have to go by the bid and the ask. Okay, the bid is 110.50 and the ask is 110.66. Okay, so you got to make sure you're looking at the right set of numbers. Okay, Angel, you got that? All right, thank you. Okay, we already looked at series, so let's some of these questions here. Oh, somebody wants to take, Raffaello wants to take a look at General Motors. Love General Motors. I do. But probably not this week, though. Check this out. Now, remember what I say, it takes you 2 or 3 seconds to figure out if the chart's right? Here's a perfect example. The high, the low, where was it, where is it? Look at the movement. Up, down, now she's going up. Well, if I zoom into this right here, it's going to look like it's at a 30-day high. So that's going to be a no. You watch. 30 days ago, right there. Okay? The high right there, down right there. See, this should be where we're getting out, not getting in. Okay? They go down, they go up. What do you think is going to happen next? It's going to come back down again. Sorry. But that's just my opinion. If you like General Motors, hey, more power to you. Okay, Jayton Sony AMD, that's Advanced Micro Devices. Advanced Micro Devices is a no because the numbers just don't work. Okay, I don't think they have dividends. AMD. And without dividends, it doesn't give me predictability of movement. And without predictability of movement, it's like we're just spinning our tires going nowhere. Like, why are we jumping at it? But look at that movement, though. Last 90 days, here's your high, here's your bottom. Okay, she's down, now she's bouncing up. Good. Well, let's take a look at the 30 days. Okay, what does that show you? Down, big up, big down. Look at it. Gap here, gap here, gap here. Yep, this one's going to fill. This one right here already filled. Now, is it going up or what happened here? Okay. Now, I don't trade AMD. Yeah, not old enough, number one. Doesn't have dividends, number two. 30-point drop in earnings per share tonight. Oh, that's not good. Let's keep on going. More questions. Jimmy, the problem is you're looking at the current price of the stocks, but the price for options from Friday. Yeah, Jimmy, that's absolutely correct. Only because, Jimmy, we have no other choices. Okay, so this is the current price right now, 122.84, or the last traded price from Friday. So on Monday, tomorrow morning, when the market maker opens up, all these numbers are going to change. Okay, what I'm showing you is how you take the numbers to figure out, is it right or is it wrong? Well, the math equation never changes. That stays the same. These numbers consistently change. So tomorrow morning, it's going to have another price here. But if it's the price here, strike price, the premium, the math is still the same. What am I buying it for? What am I selling? What am I collecting? Is that 1% or more? That always stays the same, that equation. Okay, I can only work with what I can work with. This is the numbers I have. So when the market's open, they all change. So you're throwing a dart at a moving board, at a moving target. So yeah, you're right. TJX, Scotty wants to look at TJX. TJX. Ooh, I like the moving chart. See, it doesn't take that long. High, low, where was it? Where is it? Where's it going? Up, down, up, down, up, down, up, down, up. Okay, simple. It takes you not even a couple of seconds. I want to see this. What's happening here? Okay. But before we waste our time there, the current price, 123.21. So the 123 is going for 71 to 106. So these numbers aren't even close. So even if the chart looked awesome, it's going to be a no, because the number's like, why? No, I may like the company, great, but what's the rate of return I'm getting? That's no. Okay, that's right around 0.5% for the week. Now I understand 0.5% is over 26% for the year if you get 0.5% every single week. Candy, also, if we set the expiration date for 31st, does that mean we buy at that price? Do we then buy and hold, or do we immediately sell for the following week? Okay, you're asking two different questions. Okay, you're not setting anything. You're just you're just selling an option that expires on that date. Okay, you're not physically setting anything. Okay, you're selling a covered call. The covered call already has built in whatever expiration date. So you choose which one you want. Okay, choose the 31, change the 7th of February, check the 14th of February, the 21st of February, the 28th of February, whatever. You decide. You buy stock, you sell the option for whatever strike price you want at whatever date you want. Strike price is here, the dates are over here. All right. The house business. If it makes sense on the 30-day and does not make sense on the 30-day, what do you do? Well, It's a no. It's that simple. Because you're starting at the 1 year, okay? The 1 year will give you a good idea of the overall movement. Then you look at the 90-day. Well, because the 90-day actually has yesterday's on there. So you have a good idea of the motion, but it changes the view. The 90-day gives you a bigger view, but you're more interested in what's happening now. Yeah, you see now, you can choose the call of the 31st. You don't have to. Okay, so let's keep on keeping on. All right. So hope that makes sense. Look at Simone. How are you? Cool. Carol. There he is. Lost my ass on Siri last week. Looks so good, too. All green signs. Carol, what do you mean you lost money on Siri? S-I-R-I. Now, hold that thought. Now, hold on a minute. Before we go much further, give me a dime so I can phone my mother. Siri, right here. Okay. Now, I got Siri last week. Sorry, the 21st. Okay? I jumped into Siri last week. I bought it at $22.47. Hold on. Let's do this. Let's do this. We're gonna take a close look at Siri. Yes, it does. The expiration. Yep. Okay. Take a look at Siri. S-I-R-I. And we want to go back. All right. Here we go. You ready? Siri? Because you said you lost money on it? Okay, so I bought it on the 21st, which was last Monday. I bought it $22.47. Okay, and I sold the 22.50s, got 33 cents. Okay, that's more than 1%. However, the 22.50s. Look at where she ended up this week. Say I jumped in on the 21st, right here on Monday. Okay, and then she ended up here. Okay, so I still own the stock. Did I lose? No, because I still own it. I haven't sold it at a loss. I have no intention on selling it at a loss. So the thing is, I'm sorry you lost money on Siri. Okay, I don't know what you were thinking, number one. Because see, here is a very limited, what do you call it, correspondence, which means I can't interact with you the way I normally do. Okay, so you lost your ass on Siri. Terribly sorry, kiddo. I just showed you the trade that I made, and I'm here every night walking people through. So I don't know exactly what you did, but I'm sorry it didn't work out for you. Okay, so currently it's at $21.97, and more than likely, I will probably sell the 22.50s this week. Well, because I already own it, so I might as well sell the 22.50s and pick up that 45 cents. Well, that's another 2%. Well, that actually works for me. Hold on, let's actually... Is that the one? Nope. Okay, there's Siri right there. All right, so let's get rid of this. Let's do this. And I'm entered at 22.50, so I have the 22.50s right there. Okay, so now I have 2,000, so I want to sell 20 contracts. And 40, I'll do 44, because 40, well, no, 45, that would be 2%. Yeah, 2%, okay. And I'm going to put it at good till cancel, so it ends when it ends. And look at that, 800. See, this is the trade that I'm doing right now. Now, I am using a limit order when I sell something I already own. When I'm entering into a new position, I do a market order. But if I already own something, then I do a limit order. All right. So I'm going to sell 20 contracts a series, 100. Those are the weeklies. Apple's at its low. Okay, we'll take a look at Apple. Well, I'll write it down. Don't know if we'll actually get to it. So many of you guys just keep blurting out stuff to look at. All right, so I'm going to sell 20 contracts a series, 100, those are the weeklies, 31 January 2025. The 22 and a half. Well, I bought the stuff at 22.45, something like that. Well, that's still over 1%. But here I'm collecting 45%. Well, that's 2% for the week. Well, I don't mind picking up 2% of the week on something I already own. What the hell is this? This is Siri. Okay, so I'm going to hit send. So I'm making $900 off of this one, and the cost is $13.31. That's the contract cost for the options that I'm selling. So send. So that went right to the market maker's desk. See, he's going to see that first thing tomorrow morning. If he agrees, he will buy it from me, and then I will make that much money on Monday, which is tomorrow. All right. Next question. But there, Carol, if you want to drop me your number, give me a call. I'll take a look at it and see where you went wrong, or see what went wrong. Okay, Moondoggy, Tesla, no. MU, Joe, I like MU. MU. Unfortunately, look at this. Okay, 30-day high was 2 days ago. And we have 2 days to the downside. So you get all this profit from 85 to 110. Well, that's 25 bucks. Well, 25 bucks on an $85 stock. Well, that's 30, almost a 30% jump. Yeah, there's going to be profit taking, and it started already. So for me personally, Micron, now I do own some, and I have bought it in the past, but I only like it when it's going to the upside. Okay, so right now it's coming down, so I'll probably look at MU in a couple of weeks. Oh, you bought it at 23 on Tuesday, was at 22.87, lost. How could you have lost? Okay, if you bought it at 20, bought it for 23, you should have sold the 23 call against it. And then, anyway, we can talk about it later. I'm missing a lot of these questions. And no, this is not Forex. There's Simone right there. Thanks. MU, here we are right here. No to Tesla, thank you. Nope, this is not Forex. B-Rad Daddy. Riot this week? Ooh, let's take a look. Now, I do have some Riot. Let's see what the numbers look like. Ooh, interesting. Okay, high, low, where was it? Where is it? What's the direction? Up, down, up. All right, let's take a look at the numbers. What can we do Riot for? Well, Riot tomorrow, 13.11. The 13 is going for 93. The 13.50 is going for 66. Well, both those numbers are outrageously awesome. But is the chart telling you it's the right time? That's the important one. Let's take a quick look. A year ago, we're at 11.34. We topped off at 18.33. That was back at the end of February. That's the high of the year, the end of February. Last 90 days. Oh, here's the bottom right there. Beginning of September. Beginning of September is the bottom. Shoots up, basically goes sideways. That's it. Nothing dramatic. Nothing fancy. Let's look at the last 30 days. Now that's a tough one. Look at it. Down, up, down, up, down, up. Okay, still a nice upward trend. Okay, that looks nice. Now, do you like Riot? Well, let's see. It's at 13.54. What does it normally do? Holy cow, did you see what I just saw? Right there, look at that. This is where we are right now. Look at that peak right there. That's nice. Okay, where we are right now, toward the last week of January. Now, last week of January, first week of February, second week of February, third week of February. Now, is that guaranteed? No, it's not guaranteed, but it is a good indicator of what normally happens. Well, if this thing normally shoots up in February, why the hell not jump in? That's what I'm looking at. All right, so let's see what the numbers look like. First, change this back. Get this out of the way. So the 13, all right, so if I buy it at 13.11 and I sell it at 13, which is the safer trade because it's already in the money, I can pick up 93. But 93, I'm losing 11 cents. So you take 11 cents off the 93, you walk in with 82. Well, 82 cents on a $13 stock, well, 1% is 13. So how many times does 13 go into 81? At least 5 or 6. That sounds good to me. And all the numbers are looking right. So I'm going to write that down and circle it for tomorrow. All right. Next. All right. We're at a little bit past 11. In about 5 minutes, we're going to stop looking at stocks and just answer questions. Okay? Because there's way too many questions here. So B-Rad Daddy, I do like Riot. He doesn't do Forex. BCE. What the heck is BCE? Boston College? I don't know. Why do you trade Riot? Well, Sweet Jones, I make exceptions for certain stocks because they're on someone else's list. Okay, now Siri is on Warren Buffett's list. Riot, I don't really remember 100% whose list that was on, but it just works so predictably. So that's why we're doing this one. And we're only doing the safe trades on Riot. I don't know what that means, because he's at 13.50. She could drop all the way down to nothingness. Could. And that's one of the things you have to take into consideration. Anytime you buy something, it could drop down to nothing. It could. Okay. What are we doing? Okay, yeah. So we're moving on to the next one. BCE. I have no idea what BCE is. It's a no is what it is. Monthly options. I don't do monthly options because the numbers just don't work. Plain and simple. The numbers just don't work. It's a no. Oh, what do I think about XRP? I think I'll look at XRP in more than 19 years after they have 20 years of profitability. I don't get the options. I always lose. Beamer Boy 89. You know what? If you drop me your phone number, go right up here in the bio, click on that. Click on that, and then send me a text message with your phone number. I'll give you a call and walk you through it slowly. Okay, remember, it was created for a 9-year-old. I got faith in you, brother. It's not that hard. So let's keep on going. Rear view mirror, you like that idea? %1 is better than 0. Candy, you're absolutely right. Boss man, what do I think of XRP? Master Yoda, hold on a second. Options can be high risk, high reward. Well, Brian, here's the thing. Now, Brian thinks options can be high risk, high reward. Not necessarily so. Okay, we're getting 1% a week and almost no risk whatsoever. Okay, now what do I mean by no risk whatsoever? Well, I'm looking at companies that have been in business for over 100 years. Well, look at Coca-Cola. They've been in business for over 140 years. They're not going anywhere. Where's the risk with Coca-Cola? And don't give me that crap. It could go down. Let's pull it up and see what Coca-Cola is doing. Okay, here's Coca-Cola. Here's the high of the year. Here's the low of the year. Okay, here's where it was. Here's where it is. What's it doing? Well, it went up. It went down. Now what's it doing right now? Don't know. Let's take a closer look. But before we do, and this is the reason why I don't trade Coca-Cola, look at the numbers. 61.96. The closest one's going to be 62. It's the closest. 62 is going for 51 cents, around a 0.8%. That's not 1%. See, I don't remember buying Coke very often. Okay, I've been trading for over 20 years. I hardly ever buy Coca-Cola because the numbers just don't work for me. Okay, there's too many other companies that do give over 1%. But what is 0.8% for the year? Well, 0.8% is probably around 40-45%, somewhere in that area, if you're okay with that. I mean, you can do Coca-Cola every single week. Okay, all you do is you zoom in. Where are we right now? Okay, this is where we are right now. What does it look like it's doing? Down, up, down. Looks like she's turning right here. Let's get a little closer. All right, here's the last 30 days. Let's pull this out a little bit. Okay, it all depends on how you're viewing the chart. Well, down, up, down. It looks like it could be turning here. Okay, because there's not a whole lot of profits here. From $60.75 to $62, that's not a lot. Okay, so that's 60, 61, 62, $2 on a $6 stock, $60 stock. Oh, not that much. it's under like 10%. So yeah, it's not a huge mover. Okay, so I usually don't buy it. So I always look at companies that are consistently profitable. Now, Coca-Cola is consistently profitable. They have increased their dividends for the more than 5 decades, but I'm not getting 1%. Okay, so Master Yoda, boss man, what do I think of XRP? I think it's great. However, I don't trade it only because it's not a dividend stock. Okay, they don't consistently increase any dividends whatsoever. Rigged. Oh, like everything. Fox Hunt, how are you today? Okay, so Max and Apollo. Oh, Brian just asked a question. I like your strategy. Eventually want to try it, but consistent growth takes a lot of capital. No, it does not. My grandson started with $50. Okay, I got a lot of people that start with a couple of thousand. Oh, but it depends. Okay, so Massen Apollo, 52% is 1% a week. No, 52% simple interest is 1% a week. Can we look at Comcast? Yeah, let's take a look at Comcast. CMCSA. Ooh, I like that chart. Did you see that first thing? Okay, high, low, where was it? Where is it? Look at the movement. Down, up, down, up. Here's the bottom of the year. Okay, now Comcast, granted, they've only been around for a little over 50 some odd years, but they've got over 64 million clients paying them every single month. Candy, is your strategy primary covered calls? So that means I need to buy the stock first. Yep, absolutely, Candy. All right, yeah, I get it. You have to buy 100 shares of underlying stock for the contract. That is correct. For every 100 shares, you get to sell one contract. One contract is equal to 100 shares. Okay, they go hand in hand. You buy 100 shares, you sell one contract. 200 shares, 2 contracts, so on and so forth. XRP is not a dividend stock. That's a no. What's your YouTube channel? The 10-Minute Trader. Futures took a drop. Yeah, I don't do futures anymore. World you want to live in, girl. I'm so late. We'll watch from the beginning. Would you look at Pfizer, Kohl's, General? Okay, we already did General Motors. We already did Dell. We already did LUV, Southwest Airlines, and Macy's. Okay, so we haven't done Macy's yet. We'll take a look at that, and that will probably be the last one. We got a lot of questions to go through. Macy's. Can you look for cheaper stocks? Okay, Candy. Yeah, there are a lot of cheap stocks. Hold on, real quickly, before I lose track. Oh, no. I gotta do this 1 second. Hold on, I'm moving this over here. There we go. Where are we? Sorry, I'm just still getting used to the software. This is what I want right there. Okay, get rid of this. Go to this. Go to Dividend Aristocrats. How about we go to Dividend Contenders. Here we go. So we're going to the Dividend Contenders. Whoops. Get rid of that. Hold this all the way down. Go all the way up. Now, here it is from low to high. Okay, MPW, $4.69. Pets, $4.94. CULP, C-U-L-P, $5.32. NUS, $6.89. KW, $9.12. Needless to say, there's about 20 or 30 companies under 30 bucks. So you can decide what you want to do, what you want to look at. Now that's just one of my lists. I have a bunch of lists. So let's get this one out of here. All right, let's go back to here. All right, so we'll take a look at quick charts for Comcast. This is going to be the last one we're going to look at, and then I'm going to be answering questions for the rest of the night. Here's our high, here's our bottom. This is where it was, this is where it is. Look at the movement, down, up, down, up. This is the area we want to take a look at. This is the low of the year. Now she's bouncing off the low of the year. You've heard it bunches of times. You're going to make most of your money buying low, selling high. Well, the low of the year was a couple of days ago. We can take a close look at that. But before we do, is it going to be wise to do it? So, 37.49. So 37.49, we'll be looking at the 37.50s. Well, right here, 37.50, 95 cents a share. Well, that's just a little bit less than 3%. Well, 3% a week on Comcast? Look at where it is. It's almost at the bottom of the year, and it's bouncing up, going up. You can only have one high of the year, and you can only have one low of the year. The high of the year, 47. Low of the year, right around 36. Okay? We already have it. It's right there. Now it's going up. It makes sense to jump in, especially when the numbers look good. So let's take a gander. Take a gander. All right. Get this out of the way. Okay, the high of the year was back in the beginning of February last year, 47.24. Drops, goes sideways for a bit. Okay, last 90 days, right there, last 90 days. Okay, 90 days ago, we're at about 41.50, jumps on up. There's our high right there, 45.36. And here's our bottom, right here. And look at this, here's the high, here's the bottom. Look at that beautiful setup going to the upside right there, yeah. All right, so, last 30 days. Still looks good. 30 days ago was the high. 2 weeks ago was the bottom. Look at that beautiful movement to the upside. We got all this room to keep going, and it's a strong momentum. Makes sense. So what do? Me personally, buy a covered call, buy the stock, sell the option, collect that premium. It looks like it might be right around 3% if you like Comcast. All right, so this is the last one we're going to look at. Now we are just going to answer questions. Intel, Bumblebee, we already looked at it. If you execute a covered call around 50 and the stock drops 10 or more, what do? Assuming it meets all the dividend standards. Well, Tim, basically you just follow follow it down. So if you're buying it at 50 and it drops 10 bucks, now it's at 40. Well, I'm not going to be selling the $40 calls. I might do the 42s and the 43s. I want to be far enough away from where the action is, so I'm bringing in something, because something is always better than nothing. And if you can get a 0.5% or 1/4% every single week and the stock is still dropping, well, just better hope that the other positions are going to the upside. Now, every once in a while, you will have a losing week, because nobody wins all the time, unless your name's Pelosi, of course. You know, because they cheat, in my humble opinion. But anyway. Yeah, you think that's funny. Generally, James, generally, what option time frames do you prefer? Weekly. That's a good description, 1% per week. Nothing wrong with that. Alrighty. You're saying that now. See, everybody says that when they first say, well, 1% a week's not bad. But when you buy a stock, you get your 1% on Monday or Tuesday. And then the stock jumps up and you say, oh, damn, I could have gotten more. That's where you're going to get in trouble. Because that is going to happen every single week. You're going to buy something. You're going to sell something. You're going to get your 1%. And then the stock's going to jump up. And you're going to say, damn, I wanted that. Yeah. No, you have to get that under control. Because it's going to be a problem. And it happens every single week. You buy a stock. You sell a covered call. You get 1 or 2%. And then the stock jumps up. And then that little greed monster on your shoulder starts whispering in your ear, making you do stupid mistakes. Keep your number one goal in mind. Mine is consistent profitability. If I can make that 1% be in and out, back into cash, yeah, I'm going to do it. Okay? I got kicked out and missed what you said about Comcast. Oh, my crazy, amazing life. Sorry about that. Comcast, where are we? Oh. So Comcast, 30 days ago was a 30-day high. 2 weeks ago, 30-day bottom. Now she's going back up again. Plenty of room left to keep going. Okay, and this is the bottom of the year. So it's got a nice run up to go to even get close to the high of last year. So, but the question is, do you like Comcast? Well, that's question number 2. Question number 1 is always the same, is, does it make sense? Buying Comcast at the current price, which is $37.62, selling it to someone else, $37.50, a little bit less, but you're getting a high premium which offsets. So you're actually making 2 or 3%, even though you're selling it for less than what you pay for. That makes no sense to people. My son can't wrap his head around it. He says, Dad, what do you mean I'm buying it for $37.62, selling it for $37.50, and how can I be making money? Well, because the person buying the option from you, who wants to buy that stock, is giving you a premium. It's like kind of like an insurance payment. Okay, you know how you make your payments on your insurance every single month? Well, you don't collect anything from it, but you pay it every single month. Keeps you from losing. Well, $37.62. I'm selling the 37.50s. Yeah, I'm going to lose a little bit if I do. But if I add the premium that I collect to the strike price that I sell, that gives me an effective sale price of $37.50 plus 95 comes to $38.95. Well, that kind of works for me. Okay, because it's higher than what I paid for it. If I'm selling it for more than what I paid for it, and I'm making money safely, predictably, consistently every single week, how could I go wrong? In some of your accounts, you show a few positions that you are down. No. It shows a few positions where the stock price is down from what I bought it for. Okay? But I don't sell for a loss. I had a couple of losses last year, but it wasn't that much. All right, let's keep on going. I need AI bot to trade for me. Okay, Reality OD. I don't tell you, I don't trust computers as far as I can throw them. But it's an interesting question. Michael, how often do you miss or lose your option for 1% a day? Dude, I don't do 1% a day. I don't know where you get that idea from, Tim. You still sell calls on the losers. Of course, it's not a loser, dude. It's not a loser. It's just a little bit down. Okay? We got to remember, anytime, because that's all the stocks do. Look, they go down and then they go up. So if I buy it here and get 1%, then she drops down to here, and I'm only getting 0.75% or 0.5%. Well, what's going to happen when it goes back up again? Well, I'm going to make over 1% and then eventually hit my target and be out. So, so sometimes I get 1, 2, 3, 4% a week, and sometimes I get 0.5%. But it averages out to over 1% every week. And that I'm okay with. What happens if the shares get called? Well, here's the thing. I'm looking at it twice a day, every day. Now, not I'm sitting in front of my computer. Well, because in the morning I have a morning trading group. It is a paid trading group for people that are serious about their investing. We jump in the morning and we take a look at all the positions. Well, great. Well, at night, I take a look with you guys. And then I have a good idea of where my positions are. Because it doesn't take long. You open up a chart, say, oh, here's where it was a couple weeks ago. This is what happened. This is where it is now. It looks like it's going up. It takes you 2 to 3 seconds. High, low, where was it? Where is it? Where's the movement? Down, up. It takes 2 or 3 seconds to see that. It doesn't take a lot of time. All right, anyway, let's keep on moving. Let's keep on keeping on. Takes a lot of capital. No, it does not take a lot of capital. Okay, so if you start out with $100, 50% of $100 is going to be $50. Okay, if you start out with $1,000, 50% a year on $1,000 is $500. No, you don't need 50 grand. What's a covered call? Oh my goodness. I started with one account with significantly less than that. Now the account's up at 35,000. All right, Patrick, cool beans. What software are you using? Keto Johnny. This is Think or Swim. Okay, that is with Charles Schwab. It's a trading platform. That's awesome. I'm thinking I want 2,000 a week, so I need a lot of capital. Yeah, if you want 2 grand a week, you're going to need 200,000. Okay, but where else can you get 1% every single week? Current night session is down. Hey, Mikey G, what's happening? With Elon support, the favor of Trump will Bitcoin blow. Okay, whatever. Do you invest in quantum computer stocks? No. Do you like Kohl's? Yes, I do. Price has really come down. Thoughts? Sandy, I love Kohl's. I do. I actually own some of it. Have you bought quantum stocks? Never even heard of it. Otter Tail Corporation. Never heard of it. What do I think about quantum computing? Rigetti, to be specific. Okay, yeah, RGTI, I think that's what it is. Yeah, we looked at it the other day. No. Bought for 23 on Tuesday. Now, Tuesday was at 22.66. Lost my whole position. It didn't break 30. Okay, Carol, I'm not quite sure why you're looking to go from 23 to 30. You mentioned a Zoom meeting that will be a big, wait. Tim McCarty, you mentioned in a Zoom meeting that you took a big loss one time. What happened? Yeah, I was being greedy and stupid, put all my money into one trade, into one company. It went the wrong way. Yeah, that was 2002, maybe 2001, 2002. Okay, so Carol, like I said, you're having an issue with that company. Okay, great. I have, from watching your, Carol, by watching all your text messages, I'm not 100% sure what you're looking at. But you said you lost your position on Kohl, or I think it was Kohl's, Walgreens. One of those. Okay? But from what you're looking at, you bought it for 23 on Tuesday, was at 22.68, lost my position, it didn't break 30. I'm not quite sure why you thought it was going to break 30. Now it's down so much, my call expired worthless. I'm not quite sure why you're buying calls in the first place. My whole option cost me 30. Okay, so why are you buying options? See, you're looking for something else. Because here, I don't buy options. I sell options. I want the option to go to zero. Okay, so the company you bought, I actually still own. I think it was Siri. Yes, coming back to me now. It was Siri. So let's pull up Siri. Siri. Okay, let's get rid of this. Let's go to here. Here we go. Okay, so here's Siri right here. Okay. Now, if you want, we can change the chart so you can see what it looks like. Some of you guys might have difficulty following it. Okay, so here's the chart now. The green is up, the red is down. I don't know where you jumped in. I jumped in right about here, I think. The 21st. Oh, yeah, right about there. That's where I jumped in, right there. That was last week. Well, because I saw it moving sideways. Okay, and it's, way below a 30-day high. Okay, up, down, up, and back up. That's where I jumped in, right there. Now, I don't know what you were looking at. Why didn't it break 30? Well, I don't even know where you get 30 from, because that's not what I do here. Because if I'm buying it at 21, I'm looking to get out at 21 or 22. I don't know why you're thinking 30. And I don't know why you're buying options. I don't buy options. I only sell. 80% of all options expire worthless. So why would I want to buy an option and be on the 20% side where I'm going to lose money? Sorry, I don't buy options. I sell them. So I'm sorry that you lost money. I have no idea why you did what you did. It doesn't line up with anything that I do, because I buy the stock, sell the option at the exact same price. So if you bought it at 23, you should have sold the 23 call and got 1 or 2%. And then you'd still have the stock, because I bought mine at 21 whatever, okay? And I'm still at 21 whatever. Even though the stock went down a little bit, I still got my premium last week. And I get to do it again next week, which is tomorrow. And I always own that stock. I wish you would send me your number, we can chat, and I'll walk you through it. And I might be able to point out what you did and try to figure out why you were thinking what you were thinking. Because there's no, I don't see anywhere, well, right here maybe, had you bought it, had it gone up. But I don't know why you would have done that. Anyway, let's keep on going. I have a YouTube channel, user 78848361, whatever. Yeah, the YouTube channel is .Tim and Trader. Target, if you have time. Okay, rude dude, sorry, we're past 11:30. I'm just going to answer up the question, that's it. 86, thank you for that. Okay, cool. Carol, I see what you're saying. You buy for 23. It opened at 23.68. It never broke 23. And it expired worthless Friday. Yeah, it's supposed to expire worthless on Friday. All right, see, you bought it at 23, okay? It opened at 23.68. Okay, it never broke 23 and expired worthless. It's, all right, see, what you're saying makes sense to me, but what you're not including is, did you buy a call or did you sell a call? Okay? Okay, so if you bought the call, yeah, it expired worthless. I get that. I don't buy calls, so I'm not quite sure what, how I can help, because I bought the same position. I bought the stocks, I sold the options, I collected the premium. It didn't hit my target. I still own the stocks. I didn't lose anything. Okay, I'd love to see exactly what you did. What option time frame plan? Carol Gooley, he sells calls, so he can't receive the premium call, blah, 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 blah. Right, doesn't have, yeah. Okay, Master Spanker? Okay, Master Spankin', okay. I know why it doesn't have a dividend. Now, when I say I buy stocks that are on Warren Buffett's list, not all of them have dividends. AA still coming down? Could be. What option time frame do you trade? 7 days. Richard Bruner, where's the lovely wife, dude? Hillbilly Shuffle. Ooh, I wonder if that's actually a song, because that sounds like a song. Hillbilly Shuffle. What did they speak in the UK before the United States of America invented the English language? Oh my God, really? That's an interesting one. It's not always a dividend, is it? What about MSST? We have to look at that tomorrow. Weekly options. Does he trade only weekly options? Yeah. Why would I want anything else? I'm looking for weekly cash flow. FH, I'm new here. Cool beans. You're right, Ryan's no dividends. It's one of the exceptions that he trades. All right. What are your predictions about bunk? Never heard of it. Options can be. Options can. Ooh, that's cool. Who gave me that one? I don't know who did that one, but that was funny. That was cool. All right. Options can be if the underlying makes a huge move in your favor, but they don't always. Okay, so FH, I'm not looking for huge moves. I'm looking for nothingness. What does nothingness mean? Well, if the stock is currently at 21.96, when I say nothingness, I want to stay at 21.96 come Friday. If she goes up, great. If she stays the exact same, double great. If she comes down a little bit, that's when I start to get a little nervous. But I never buy anything that I'm not okay with the movements that it normally makes. Okay. Coney Dividends. Okay. DJ Stonk Ape. That's an interesting name. Now, DJ, I look at Coney 2 or 3 times a week because people like you ask me to take a look at it. So here's the thing. With Coney, you really got to take a look at the numbers. Number one, are they consistently profitable? Number two, how often have they increased their dividends? Well, Coney is only a 1-year-old company. So it's kind of like taking the keys to your Lamborghini and give them to a toddler. Yeah, no thanks. I don't put my money in companies that are that young. ZTS, well, I'll take a look at that one. Can I make money with only $500? Okay, Wally, $500, yeah, it's going to be a little tough. Only reason being because we're looking for 1% a week. $500, 1% of $500 is $5. And then you have fees and commissions. So you could slowly get there. I mean, really slowly. But it's going to take consistency and time. And you can't make, a huge amount. But here's the thing. 1% a week or even 0.5% a week gets you a lot faster to where you want to go. And if you're starting out with just $500, well, how much are you going to commit to putting in every single week? You're going to throw in $5, $10, $20, what? And as you continue doing that and you consistently getting a certain amount per week, well then yeah, it will slowly get there. Alrighty, Jordan. Don't. Carol Goo, do you sell to lose all 100 shares as well? Okay. Wade, what's up with Oracle Monday? Don't know. We're past 11:30, so if you ask me tomorrow, that'll be cool. Sandy, ask me again tomorrow. We're way past 11:30. Bumblebee Intel, we already looked at Bumblebee. Nobody shops at Macy's. Well, they're still profitable and they're still trading. How many days ahead of expiration do you do options, and when do you sell them? 2 weeks before. I don't buy, I sell. Tyrese, what's happening? Comcast. Oh, Roger, way to go. Enters on Mondays, exit Fridays. Like to. I got kicked out and missed what you said about Comcast. I like Comcast. Man. I missed some of these questions. Time frame. Did that one. Try to find these questions. I got kicked out. Okay. Man, some people got rich following that witch. I have no idea. Yep. How fast can I become a millionaire? Wally, you're definitely in the wrong place. I'm not looking for capital appreciation. That's what you're looking for. I'm looking for cash flow. It's only 1% a week that I'm looking for. I'm particularly looking for 1% a week. Do you teach options for beginners? Yep, that's what we're doing here, Kill Shot. I've been wanting to learn contracts. Well, here you are. Thanks. Always expiring options that week, every single week. Same thing over and over and over again. The Beer Jew. So you don't sweat missing out on capital appreciation. You are happy with your shares called away? Absolutely. As long as I get 1% every single week. Because think about it this way. Every single week is over 52% a year. Compounded, it's over 70% every year. So where else can you get 50 to 70% return on your money for 5 or 10 minutes a day? It's not that difficult. It was created for a 9-year-old. It's as simple, up, down, you know. Hey, does it look right? Does it make sense? And that's the number one question. Does it make sense? If it doesn't make sense, if it doesn't look right, don't do it. Because there's so many trades every single day. You don't have to do one every single day. You don't. Do what you think works best for you. Okay, how do we know that was the bottom of the year and it's not headed further down? Well, FH, we don't know anything. Hold on, let me put my glasses back on for a second. Let's go back here. Okay, now, how can we tell it's the low of the year? Because it says right here, low. Okay, that's the low of the year. Okay, you don't have to listen to me. Where's the high of the year? Look, it says right there, high of the year, right there. Okay, low of the year, right there. Okay, if you don't understand it, get a charting service that tells you where the bottom is. Oh, there's the high right there. There's the low right there. It's not that difficult. Don't. 1% rate covered call. Thank you. If I invest in IBM, how often will I get paid in dividends? Wheezy, dividends for IBM is every 90 days. In average, how long do you keep a stock? 5 days. You only buy covered calls. I only do covered calls. Buy the stock, sell the option. Here, okay, here in this platform, here tonight, I am teaching only covered calls. Now, do I do that all the time? No, I have a lot of trading strategies I do. This is the only one I give away for free. And I figure, hey, 50% a year, well, that's a nice rate of return. Okay, if I'm giving that away for free, what do you think the people who pay to join my morning trading group, what do you think they're getting? That's an interesting approach if you think of it that way. Nike, ooh, I like Nike. Sounds like she bought a call. It does sound like she bought a call instead of selling the call. Yeah, off grid with A-Dad. Off grid with A-Dad. Dude, you got to give me a buzz because, you know, you're off grid. That's my ultimate goal, to get my in-home house, my in-town house off grid. Because I'm right in town. I get the power lines, I get the sewer lines, all that crap, and I want to be able to unplug. So, sleepy time. Yeah, it is past sleepy time. Let's keep going. Hello there, Chatterbox. Okay, Wally B, I'm new to this world. Where do I start? Well, you start right here. You can ask as many questions as you want. Thanks for the info. I've made some nice returns lately. Carrot with hot sauce. What an interesting name. Huh, that's funny. Okay, that's it. That's all the questions. All right, that means I'm done for the night. Now, I do answer each and every individual question. Okay, you guys ask them. And the stocks that I like to look at, we take a look at them. You know, the high, the low, where it is, does it make sense? Buy a good company, hold on to it. If you get 1% every single week, why the hell not? That's over 50% a year. It works wonders for me. Okay, you guys want to join along? Here I am. Okay, have a nice day over here. Have a nice day over here. Have a nice day over here. And now, the end is near. Guitar guy. Okay, guitar guy, you got to throw up that question again, dude, because I don't see it. Okay? And I can't isolate questions by username. And I can't see where you actually asked the question. Okay. All right, so guitar guy, he said, can I answer your question? Yeah. And I said, sorry. Okay. Okay, dude, I'm not seeing your question. You must have something in your question. Okay, ask it again. Post for 30 days, share. Oh. How much would I need to start with realistically? Okay, dude, my grandson started out with 50 bucks. The ideal the ideal methodology would be to start out with whatever you can comfortably start out with, and then systematically every single week do something, and don't ever stop every single week. Okay, it depends on how young you are. I'm 61. I'm retired. I've been working since 1973, most likely before you were born. So I put in plenty of time. Okay, it took me a while to get the amount of money that I have. Okay, so I've already paid my dues. So you got to start somewhere. So you have something that I don't. Yeah, well, for a covered call, you got to buy 100 shares and then sell one contract against it. But there are other strategies like hold on a second. I can't remember the name. Dividend capturing. That you can start out with 50 bucks. Because wherever the dividend comes in, you buy it just before the EX dividend date, you capture that dividend, and then you sell it for profit. Well, great, because just before the dividend, the stock has a tendency to go up. So if you know when the stock is going to pay its dividend, well, then you know the stock is going to go up in value just a little bit, and it doesn't have to go up a lot. It's the consistency. Okay, if you know Ford goes up in the first week of every quarter, well, the first week of every quarter, you should be buying Ford. Capture that dividend, jump out, jump into whatever's next. Well, what's next? That's when you have to start taking a book to figure out exactly what you're doing. Sorry, that's done. And done. All right, that one's done. All right. Oh, that makes sense. Thank you so much. You're welcome. You're welcome. You're welcome. All right. That's it. You guys have a great night. And now the end is near. And so I face the final curtain. My friends, I'll say it clear.